So hello everyone, welcome for joining us for the webinar today. So thank you for your support once again. And before we start, right, if you guys have any questions, you can also type in the chat box. I will try my best to answer all of your questions. So for our webinar today, we are going to start at more around 2 minutes. We are going to wait for more people to join us first before we start the webinar today. So once again, if you guys have any questions, you can feel free to type in the chat box, which already prepared for all of you. Thank you. So for today's topic, right, we are going to discuss about the market insight, updating you guys about what's happening on the market trends recently, and then we will do some fundamental as well as technical analysis. So I hope you guys can have a more understand in the markets. And then I will also explain about the gold movement, especially from last Friday, since Ahmad are asking me about the trends for the gold. So I will answer your questions later. And while before that, we are going to wait for more people. Thank you. So we are going to wait for another 1 minute. All right, so without wasting any time, we are going to start our webinar right now. So before we start, right, here is just a very small risk disclaimer for all of you. So today's Market Insight webinar is intended for educational and informational purpose only. And participants shall not take it as financial advice or investment advice, nor a trading signal. So the accuracy as well as the reliability of the information provided cannot be guaranteed. Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. Participants are responsible for independent verifying information and considering their own financial goals and risk tolerance. Just a small risk disclaimer before we start. All right, so we're going to start now. For our today's webinar, right, we are going to discuss about the market insight. So later today, I will update you guys more on the overall trends for the dollar, gold, as well as the USD JPY, good, and then same goes with the oil market. This is the 4 major pair that experienced a significant movement recently, especially trends for crude oil as well as USD JPY. So I'll explain it one by one later. So this is the highlight that we are going to discuss today. First thing is we are going to talk about the Federal Reserve monetary outlook. So this session one is from this session one, we were able to understand about what's happens to the dollar trend recently, and then why is the dollar keep dropping. And then the next thing that we are going to discuss is mostly on the gold analysis, trying to understand about the trends for the dollar, then try to apply slowly on the gold market. We will also explain it later. We will do some small fundamental as well as technical analysis for the gold market later also. And then we will talk about the crude oil, since we do have a major fundamental news recently, especially for crude oil. And then the prospect for crude oil as for now should be still remain quite positive, as we can notice oil market are actually starting to rebound from a very, very nice support level. So later we'll talk about it, what to expect from the oil market in future. Then we will also talk about the Bank of Japan things. Because you guys know, right, on yesterday market, we do have one major things, which is regarding the Bank of Japan monetary policy statement. So yesterday we do have a crucial event, especially for the Bank of Japan. This is the main reason that caused Japanese yen drop aggressively. Then this USD JPY increase more in future. I will also explain it one by one later. So you can notice on yesterday trend, right, especially for USD JPY, they actually increased around more than 2,000 points after the monetary policy decisions from BOJ. So we will let you know what happens. And then we also talk about what we need to focus in this week later and then in future. So to build up better your trading strategy. So what you need to aware of. So now we are going to talk about starting straight. So first thing, Federal Reserve monetary policy outlook. So I think you guys are already quite familiar with the Federal Reserve, right? But for the new trader who are not sure what is the Federal Reserve, to put in a very simple term is, the Federal Reserve can consider one of the major central bank in the world. It's the US central bank. So they will likely to decide whether they want to increase the interest rates or do not increase the interest rates. You don't see like the interest rates should be considered a very simple thing. Yeah, no. Actually, the Federal Reserve decisions making on their interest rates would actually affect global assets classes. Global assets classes including the gold market, the US equity markets, even though Bitcoin, dollar trends, all of them will be affected just because of this monetary policy from the Federal Reserve. It's just interest rates thing. It's going to affect the global market. So I will explain it one by one later. So now I'm going to talk about what happens to the dollar trend recently. So you guys know, right? Currently, the prospect for dollar are very, very pessimistic, especially since September, end of September, the dollar trend are keep dropping. So why is this thing happens? It's because of recently, right? We do have a lot of negative or dovish statements from the Federal Reserve, because if you are going to look back on the US economics data, a lot of US economics data had started to forming some pessimistic view, pessimistic reading, means that currently US economy are not as good as expected. So this is the main thing that caused dollar drop. And then we do have another strong push for the gold market to drop further, which is the Federal Reserve statement. And if you're going to look back towards the previous FOMC meeting, Federal Reserve members do maintain their interest rates on 5.25% to 5.5%. These are interest decisions. This is nothing much special, but what is special is regarding of the Federal Reserve member statement. So if you are going to look back what they say after the FOMC meeting, you can notice Jerome Powell, his stance on the future monetary policy outlook are very, very dovish. To put in a very simple term is, Jerome Powell keep saying that in next year, there will be high chance for the Federal Reserve to consider even cutting the interest rates. So according to economists, as well as Federal Reserve member economics projections, right, they expect the Federal Reserve in future will likely to cut the interest rates by even 75 basis points. So when they are cutting the interest rate, right, the currency normally will dropping further one. So why is this thing happen? It's because interest rates, you can imagine like something risk-free return. In like if you want to put money in the US, you want to save money in the US, you are going to gain their interest rate one. So, or you can think another way is interest rate is equal to deposit rate. So the return that you don't take any risk one. For example, if you want to save money in the bank offer you 2% interest. Do you think the bank is going to default or bankrupt? Actually, no. And then bank will also likely to keep giving your 2% interest as promised. So no risk one. So Federal Reserve interest rates is the same theory. So when they say that when you want to save money in US, then if the Federal Reserve interest rate should be around 5%, it means that you save money in US bank, you are going to generate around 5% of interest. Okay, but in future wise, right, if the Federal Reserve decide to lower down the interest rates, it means that when you save money in the US bank from the world, your return from the bank will become lower because they lower down your deposit rate already. So when they announce this kind of news, right, it will likely to discourage people to save money in the US already, because compared to last time, we do have 5.5% of the interest, but next year, Federal Reserve might likely to cutting the deposit rate or risk-free return, or other term is interest rate. So when this thing happens, right, it will discourage people, right, to save money in the US bank. So this is a main thing, right, that can cause the trends for dollar to drop further, because nobody is going to save in US already. So a lot of investors trying to shift their portfolio into others higher risk, higher return asset. So I think, okay, if below 5% risk return, the return are not that nice already. So I will likely to seek for another substitution. So what is another substitution? First thing is the gold market. Okay, the appeal for the gold market should be become better because people will try to don't save money in the bank because their return getting lower. So they shift their portfolio and save as buying gold. So this is a thing that can cause the gold market to increase further if in future Federal Reserve member on and on saying that they are going to cut interest rates, dollar is going to drop in further. So this is the main fundamental. So if you're going to look at the Federal Reserve dot plot, right, we do notice that in 2024, according to the Federal Reserve projections, they forecast the Federal Reserve interest should be declined from the previous 5.5% to even 4.6% as a median range. It's quite a lot. So it means that if you save money in the bank, your return should be lower around 1% already. Of course, this is the main thing that can cause investors to shift out their portfolio from the US to other countries. And then this is also the main reason that cause dollar to dropping further. And then I will explain what can we do in future according to technical front. Before that, we just let you have a brief understanding about what happens to the dollar. And to put in a very simple term, just because Federal Reserve saying they want to cut interest rates, dollar dropping. Okay, this is the main fundamental for dollar recently. So after you have a brief understanding for the dollar as well as Federal Reserve member already, then we need to focus on what we need to aware of in future. Okay, so now we know Federal Reserve is going to cut interest rates, but it's just some rumors, it's just some speeches. There are no actual policy that launched yet. So in future, this kind of statement about cutting interest rates might be changed. So what we need to aware of is we need to focus on whether the statement is legit or not, whether the Federal Reserve really going to cut the interest rate or not. How can we identify it? So we need to look at the US inflation rate. So CPI data is the main thing that we need to focus on it, because if in future you look at the CPI data, the US Consumer Price Index data, CPI data, lower than the market expectations. So for new trader, to let you guys have a brief understanding about what is CPI. So CPI is another terms of the inflation rate. So in future wise, right, if the CPI data lower than the economists expected, it means that US inflation are getting lower, or the US economy are getting worse and worse. So this is the thing that will cause the Federal Reserve to cutting their interest rates or lower down their interest rates. Then this is the main thing that will also cause the dollar to drop further. So you need to measure whether the Fed is really going to cutting their interest rate or not. What we need to aware of is first thing, CPI data. And then the second thing is we need to focus on is US PCE index, which is going to release on Friday. This is also the main thing that should be provide a significant movement for the dollar as well as the gold market. This is the two main things. Later I will explain it later about the core PCE report. Okay, so now you know already, to put in a simple term, next time if you look or there is a CPI data, consumer price index data, then you're aware of it. So this is the main data the Federal Reserve is going to focus on it. If CPI data higher than the expectations, then the Fed is going to increase the rate, dollar is going up, gold price should be dropping. But if the CPI data lower than even lower than the market expectations, this is a thing that will cause the Federal Reserve to cutting the interest rates. When they cut interest rates, dollar should be dropping, then other dollar denominated asset like gold should be going up. So CPI data is the main thing that I do think that it should be more important than even non-farm payroll. Both of them are very important. I think those who understand non-farm payroll should be getting familiar to it. But as for now, since even the Fed are focused on the inflation rate, CPI data should be the main thing for the global investor. Next, we are going to talk about the gold trend. So the first thing you need to look at is recently, right? Somebody asked me about last Friday what happened to the gold market. So it's quite simple actually to understand the overall trend for the gold as for now. So you can notice, right, recently most of the trend for the gold actually keep going up. So why is gold keep going up? The fundamentals are still remain the same. You just need to apply from the Federal Reserve perspective and then apply to the dollar trend and you put into the gold market. So just for your information, the trends for the dollar as well as for the gold market, right, they are negative correlated one. Or to put in a very simple term is when you expect dollar is going to drop further, gold price should be going up. because their formula are XAU-USD. So it's quite negative correlated lah. So when we expect Federal Reserve is going to cut in the interest rates, dollar drop, and then this is the main reason that caused the gold prices to keep going up. But as for now, right, according to technical analysis, you can actually draw one Fibonacci extensions come out. So everything, all the support and resistance level are very, very clear. So I do believe some of you do not know how can we draw the Fibonacci expansion. It's very simple. I'm going to teaching you now. So very simple. So you open your MT4, which you download from PU Prime, and then you can just click here. You can notice there is I think 4 dots, and then we do have F here. So you just click it, and then you pull from the highest level, pull to the lowest level. So once you pull it right, you can notice all the support and resistance levels should be nicely formed. This is how we form, how we draw about, or how we use the Fibonacci retracement indicator. So once you draw out right, all the support resistance level are very clear for you to focus on it. And then you can notice gold market just nicely retrace back after it's hitting a strong resistance level around 2040 here. So quite precise also sometimes for the Fibonacci retracement. So there are criteria for us to draw the Fibonacci. It's just not simple draw. So you can notice the criteria is you need to make sure on the overall trend first. Example, yeah, you can see the trend for the gold here, right, is downward trend, right? So, but you cannot draw the Fibonacci yet. But if there is a small retracement or small rebound, around 20 to 30% of the overall downward trend, right, then you can start to draw the Fibonacci retracement. So I repeat, you can notice, you can just focus on this trend. Overall trend for here is downward, right? But when they are only downward trend, you cannot draw Fibonacci. There are criteria to drawing the Fibonacci one. So the criteria is you need to make sure gold market are experiencing around more than 30% of the retracement. So when they are rebound back from its downward trend here, so here is a chance for you to draw. Drawing on Fibonacci are very, very simple only. So you just need to download MT4 first thing, then you click the F button over here. You pull from the highest level, pull towards the lowest level. Here, this is the highest, this is the lowest. So after you pulling all out, right, the resistance and support level for gold are nicely formed. So as for now, what can we analyze on the gold market is short term, we can expect gold rebound mostly due to the depreciation of the US dollar because the Federal Reserve should be considered cutting the interest rates. But in longer term basis, right, before in today market, I do think we don't have much fundamental news from the US, but in this week, we do have a lot of news from the US. So before all this important event to be released, right, we can expect gold prices should be very, very flat or even trade within a range between resistance level, Fibonacci resistance level 2040 and support level 2015 in very, very short term basis. But fundamentally, in longer term, we do expect the gold prices should be remain quite positive because if we are going to look at the trends for the dollar are quite pessimistic. And even previously, we do have experienced some rebound for the dollar, but it do not increase a lot. And even the next day, it dropping back. So as for now, right, dollar trend, we need to fully eye on 101.60, of course, very, very strong support level. You need to measure whether dollar successfully break below or not. If dollar break below, then it will be higher chance the gold market should be continue to extend its gain in future. But there are criteria. Short term, we can expect gold should be experience certain technical corrections. But in longer term, if dollar successfully break below a strong support level, then you need to eye on the potential resistance level 2040 of the gold, the Fibonacci resistance level. Once gold market successfully break above the resistance level, then it would be advisable that the longer term trend for the gold are quite positive. So you guys have a brief understanding about the trading strategy for the gold already. So I repeat in a very simple way summary. So first thing you need to focus is the dollar. Focus on the support level 101.60. Second thing is you need to eye on 2040, the Fibonacci resistance level. And then next, the third thing is we need to focus on this week event that we are going to explain it later. High chance that this event will likely to trigger a potential breakout for the gold. Then everything should become clearer in future. Okay, so this is a brief understanding about the gold market. Then let's move on to other thing. Other thing that we can focus on it should be mostly on the oil prices. So you can notice recently, right? The oil price are starting to experience significant rebound. You don't see this is just a very small rebound. No, yeah. If you look at the pips, this is a daily chart just for information. If you look at the pips for it to rebound, right? The oil prices are actually rebound around 7,000 points. So, first thing, let you guys understand about what happens to the oil market first. So why is the oil market keep rebound? Recently, it's because of first thing, after they rebound after testing all-time low since, not all-time low, since COVID, since 2023, February 3rd. So after it touching it, right, a lot of investors continue to focus on it. Any potential fundamental that can push up the oil prices, right, a lot of people is going to prepare on it. So you can notice once they show some rebound trend on the oil around here, it start to increase aggressively. So in a simple terms, oil rebound, first thing is mostly due to technical corrections. It's mostly due to technical analysis. Okay. The second thing that supports the oil prices to increase further, right, is regarding OPEC statement. So we do know that OPEC in 2024, they were likely to consider cutting their oil productions. They voluntarily cut their oil production by around more than 1 million. This is their previous statement. First thing. The second thing is regarding the vessel attack in Red Sea. To put in a very simple term is we do notice there are certain people are having some war in Red Sea. So why is this thing going to affect the oil prices? It's just for information. Red Sea is very, very famous for the global shipper. They need to shift their export, they need to export their oil. So they are using the Red Sea one. So when there are significant uncertainty in Red Sea, it will likely to affect a lot of the ship nearby the Red Sea, and then simultaneously affects the oil export or oil supply. So to put in a very simple term, is these tensions in Red Sea will likely to lower down the oil supply, or the oil should be experiencing some supply disruptions. And then this is a thing, this is also another main fundamental that cause the oil price increase aggressively. So if you guys want to understand more about the Red Sea, right, you can just simple Google search Red Sea issue now. So all the details should be on the Bloomberg lah. Okay, Google already have already. But you don't have to go through everything. You just need to understand everything. Like because of this tension in Red Sea, oil supply disruption, this is one of the things that caused the oil price to increase more in future. And then the third thing is regarding on dovish expectations from the major central bank. So as you mentioned just now, right, Federal Reserve monetary policy decision is also one thing that not only affect the dollar, it's going to affect the oil markets, the gold market, the stock index, as well as the stock market. This is the main thing that can boost up multiple asset classes. So we do notice, right, recently we do have a lot of central banks, including the Federal Reserve, the Bank of Japan, and ECB, Bank of England. They are likely to consider cutting interest rates in future in 2024 because now economy are quite pessimistic. They will likely to cut the interest rates in order to boost up the economy. Right. So when there are news regarding these major central bank, including the Federal Reserve, decide to cut their interest rates, we will likely to expect oil prices should become higher in future. So to put in a very simple explanation is interest rate is not only deposit rate. You need to imagine interest rate as a borrowing rate also. So in future, if the Federal Reserve or the bank, the central bank, decide to lower down the borrowing rate, one thing will happen. When they lower down the borrowing rate, of course, as a company perspective, you will likely to borrow money more, right, from the bank, right, in order for you to expand your business. Okay, so when this thing happens, when a lot of people trying to borrow money and expand their business, they spend their money, they purchase home by borrow more money, they purchase car, consumer spending will become better, economy will slowly become very, very good. So when economy become good, right, you can try to link towards the oil prices also. So economy become good, a lot of manufacturing goods demands should be increased, and then you do know oil prices are actually used to develop or build a lot of manufacturing products one. This is first thing, but the main thing is when they cut interest rates, economy become better and better in future, everyone become richer. So when you are very, very rich, what you are going to do? A lot of people is going to travel around the world. Travel the world, you will sit more aeroplane. So the air flights the demand for the air industry should be higher. So when a lot of people fly around the world, right, what's airplanes going to use as their fuel? First thing is the crude oil. So when economy is better, more and more people travel, crude oil is the one thing benefit from it. So to put in a very simple term is, when the Federal Reserve cut their rate or the central bank cut their rate, economies become better, everyone richer, more and more people travel around the world. When they are richer, demand for oil should be increased, the price should become better in 2024. So this is perspective for the oil prices. So you just don't think that oil very simple, just a few things. Actually, no, you can just understand. What you need to understand is, as for now, right, the market trend right now, right, is regarding the Federal Reserve monetary policy statement. You need to remember this thing is not only affect the gold and dollar, it's going to affect multiple asset classes. Okay, so this is a brief understanding of the oil prices also. And the next thing that we can talk about is regarding the Bank of Japan. So recently we do notice Bank of Japan are just announced their monetary policy. Already put a very small short summary for you guys. In a simple terms is Bank of Japan decide to lower down and maintain their very low interest rates. They decide to maintain their expansionary monetary policy or quantitative easing program. And then Governor Kazuo Ueda is actually emphasizing that they are still need a lot of assessment to decide whether they want to tighten their monetary policy in future or not. So all of this, right, in a simple term is all of these statements are very dovish. It's just saying that the Bank of Japan will likely to continue maintain a very low interest rates, maintain their quantitative easing program. So as we mentioned just now, right, if one central bank decide to maintain their low interest rate, their currency should become worse and worse one. So this is a proof from yesterday market, and then you can notice after all of this statement coming out from the Bank of Japan, the trends for the USD JPY are increasing aggressively. But after that, it dropped back mostly due to technical corrections. So this is the explanation of why is it increased aggressively in future. One thing is mostly due to the Bank of Japan monetary policy statement. They are too dovish already. This is the main thing that happens on the Japanese market. So now you guys get a brief understanding about dollar, gold prices, oil prices, as well as the USD JPY. This is the major things that happens in the market. And next, we are going to discuss about the economics calendar. Then we are going to open a Q&A session. Then you can ask me any analysis that you need from me. So now we're going to focus on economics calendar. So moving ahead, right, today is already Wednesday. Moving ahead, what we need to aware of is the first thing is regarding the US GDP data. Very important that people need to focus on it. Whether the gold prices is going to successfully break above the resistance level 2040 or not, we do expect this data will be likely to give us some push for the movement for the gold, because right, you can see before this data release, movement for gold are very slow. So we need to monitor after the GDP data release, and if the GDP worse than the market expectations, very bad, then there will be increased the chance for the gold to break above 2040, because a lot of investors likely to shift their portfolio into the US, into the gold, safe haven gold. Because if US GDP is not good, right, means US economy not good. US economy are not good, dollar is going to drop, gold prices should be benefit from it. So you need to eye on multiple things. First thing is GDP data, see whether it's better or not. So after the data release, you don't rush to the market. Sometimes it will violate the market one. Then you need to have some patience. After the GDP data release, if gold price successfully open above the feeble resistance level 2040, then the prospect for gold should become a little bit better. Then the next target should be around 2060 according to the feeble resistance level. Okay, the GDP data from US, very important. And initial Jerusalem, of course, but you can see we do have tons of economics data moving ahead this week. So the most important, in my opinion, is US GDP, US initial Jerusalem, and then the most important one, the number one important data is US Core PCE price index. So moving ahead is mostly data dependent week now. So it's better for you to continue to monitor on the resistance level 2040. Then after the data release, then you slowly planning your trading strategy. Okay, so if you love risk, of course you can trade before the data. But in my opinion, I do believe that it's better for you to wait until certain data release and then monitor on the technical analysis, monitor on the resistance level, see any chances it will break above the resistance level or not. But in longer term basis, prospect for gold, as for now, right, still remain quite positive, because we do expect the Fed is going to cut rate, dollar should be dropping further. But of course, we cannot rule out the small possibility that the gold prices drop a little bit due to technical corrections. Sometimes a lot of people want to sell gold to change to cash in order for their own good. This is something that unpredictable. But if not, fundamentally, the gold prices as for now might be still remain quite positive. So I think that the Federal Reserve should be consider cutting their interest rates unless the Fed suddenly provide another thing. This is another story. Okay, so three main things that you need to fully on it: US GDP, US initial jobs claim, and then US core PCE price index. And I do notice Aris did ask, as well as Justin did ask about the trends for the GBP JPY. Same goes with the GBP USD, right? Yep. Pound trader, especially for GBP trader, we do have one important news later this week, which is the UK CPI data previously. And then the second thing is UK GDP data. Very, very important that you need to eye on it. UK GDP data, same thing. Is GDP higher than expectation? Then pound should be experiencing certain movement. Should be dropping if it's worse than expectations. And then you can do notice, right? In the early morning, UK did release their CPI data and then much lower than the market expectation, around 3.9%. You can see that this is explanations for pound trader, GBP USD, as well as GBP JPY. So this CPI data, 3.9%. As I mentioned just now, CPI is inflation data, very, very important. So lower than expectations, the trend, pound should be experience some sell-off. So 3.9%, economist forecast is 4.3%. Worse is already worse than economist forecast. And even worse than the previous rating. Means that currently UK inflation are very, very low. Economy in UK are not that good. And if you want to look back on the pound's trend, right, you can notice after data release, pound actually dropping aggressively, around 700 points. So moving on, whether the pound is going to rebound back or not, you need to eye on another data, which is the GDP data. Okay, so before we wait for the GDP data, right, maybe we can do some small analysis on the pound first. So you can notice the overall trend for the pound are still remain positive, even though it's dropping back due to worse than economics data. But long-term trend for pound as for now should be still remain okay. Why is pound as overall trend still remain okay? It's mostly due to the depreciation of the US dollar. If in future, right, dollar continue to dropping further and further, this is a thing GBP USD should be experienced not bad. The trend should be continue to quite optimism. So few things that you need to aware of it, because you expect dollar is going to be dropping further. So you need to see whether which is your good entry point. So the first entry point that you can focus on it should be around 1.2635, the first support level. So of course, if you expect that currently UK economy are not that good already, then you do expect the UK GDP should be worse than the market expectation, because the UK CPI inflation are not very, very good. Then prospect for pound are very pessimistic. You can, if you want to think like that, can. But you need to make sure on certain things. The first thing is you need to make sure it successfully break below 1.2635, a strong support level. Here, you can notice here have been touching quite a lot of time before. The second support level is you need to focus on this upward trend line, whether it will successfully break below or not. If it break again, then next target we need to eye on it should be 1.2505. And then if it break again, then the chances for pound should be chances for pound to drop should be become higher and higher. But of course, if you do expect dollar is going to dropping further, then this should be one of your good entry point, strong support level, or you can have some patience and then long when it reach around this upward trend line. But of course, when it reach here, right, your stop loss level are very easy to set, because if it successfully break below here, then you just stop loss low. So when you make your risk and reward ratio, right, for the pound, right, it's very, very good, because imagine you have some patience, you don't do anything now, and you have some patience, wait, it's drop until here, then you put your stop loss just below. Maybe your stop loss region should be around 400 points, but your TP level is around more than 2,000 points. It's quite okay for your risk reward ratio also. So this is a different trading strategy for the pound. You want to do sell order because of their UK economics data expect can, but you need to eye on the support level 1.2635, or you need to eye on you need to have some patience and then eye on this upward trend line. Okay. And then another people do ask me about the GBP JPY. One moment here. So the trend for GJ are still remain the same. Why is USD JPY continuing dropping aggressively is due to one thing, because of the UK's CPI data very low, pound sterling continue to dropping further. So short-term support level for GBP JPY is you need to eye on 1x0.30. So any successfully break below, then you focus on another sell. Then next target should be around 178.70. So to understand why this currency dropped aggressively recently, it's just one thing, because of the UK CPI data. Okay, I hope I also answer Justin's questions. Let's look at others Q&A. We the best one. Thank you, Papa. Nyanin. More questions that you guys want to ask? My question is, what's your entry strategy? Can I know what product that you prefer for Akin Kumi? Any more things that you guys want to ask? Ahmad actually asked, what do you think the lock of the Red Sea will cause to the market? Okay, so the direct impact from the Red Sea to the market, right? To answer Ahmad's question, the direct impact due to the because of the Red Sea issue, right, to the market is oil prices, oil market. So this is a direct impact. So because Red Sea is the places that use to export their oil in the world, because oil normally they are shift their oil using the ship one. So when there are issues in Red Sea, we do expect a lot of company will likely to close their export service to other countries. Then this is the main thing that will cause the supply disruption for the oil, and then it will also cause the oil prices to go further. If the Red Sea issue become intensify more, then we do expect the oil supply should be lower and lower in future. So this is a direct impact for the oil market, to answer my questions. Okay. And then Akuniku actually asked about the gold market, the entry strategy for the gold. One moment, yeah. Okay, so as for now, right, it's not quite recommended for you to long go already, because if you long go, right, we do have a very strong resistance level according to people 2040. Okay, so we do know that fundamentally gold as for now should be still remain quite positive, because dollar is going to dropping further. But what is your good entry point is, first thing you need to make sure is successfully break above 2040 lor. Because when it's break above, right, your risk and real ratio very simple to set. You are very simple to set a stop loss, because if you break above 2040, then you just long. TP level just focus until the next resistance level around 2060. The stop loss level, right, just put below 2040. You can just put around 2035 if you want, 2035, 2032. And then when you compare, right, stop loss level should be around 800 point, 900 point, but TP level should be more than 1000 point. This is the first thing. You need to have some patience. Or if you have more patience, right, then maybe you can patiently wait until the gold market drop further and then reach around 2015, the resistance, the support level around here. And you can consider a long position. Then same thing, when you reach here, right, your stop loss very simple to set. Just when it's reached below 10215, then your stop loss. But your TP level should be quite okay. And then if you want to look back on the previous trend, right, here 2015 is also a very strong support level. But this, you really need some patience. But of course, some trader cannot wait already. They want to enter the market because they see this is a very good selling candlestick, bearish candlestick. Then it's also then we can expect gold should be in the consolidated range. But as I mentioned, as for now, fundamentally, the gold prices are still remain quite positive due to the Federal Reserve things. It just depends on what is your good entry prices. I hope I answered your question also, Akiniku. Justin actually asked, GBP JPY can still moving up. One moment, yeah. Fundamentally, right, overall trend for GBP JPY keep dropping, right? Fundamentally, as for now, quite pessimistic, but we do have one fundamental that can cause GBP JPY to increase. further in future. This fundamental is regarding on the Japanese thing because GBP, JPY So not only GBP that we need to focus on it, Japan is also another thing that we can focus on it. The criteria that can cause GBP, JPY to move up is we need to make sure JPY is going to dropping further in future. What news that we can need to understand to predict whether the JPY is going to drop or not, we need to focus on the Bank of Japan statement. So recently, Bank of Japan just provide some dovish statements saying that they're going to cutting the interest rates. But in moving forward, if the Bank of Japan provide more and more this kind of statement, right, about cutting interest rates, maintain a very low interest rate, and even negative interest rates, this is a thing that can cause JPY dropping and dropping more in future. And then this should be provide some bullish momentum on the GBP, JPY. So you want to long GUJ, right? Bank of Japan statement is the main thing that you need to aware of it, like I mentioned just now. Then support level for GJ, you need to eye on it should be around 180.30. I hope I answer your questions for Justin. And then more questions. Someone actually asked, someone asked EUR AUD analysis. One moment. Okay, so this is a new analysis for me. I can just draw the live charts for you lah. So okay, to understand why EUR AUD continue to dropping further as for now, right? What we need to know is currently, right? Recently European Central Bank, they actually provided quite dovish statement. So they are saying that currently the Euro economy as for now can be considered a little bit of more pessimistic already. So this is the main thing that caused EUR to continue dropping further. And then in addition, right, as for now, China economy recovery is also another thing that caused AUD to become higher and higher in future. That caused AUD higher, also causing the EUR AUD to dropping further. So these two major fundamentals are continue to weigh down on the EUR/AUD. But according to analysis, technical analysis front, right, you can notice on daily charts, AUD actually successfully break below a very strong support level. We can notice this is a very strong region. And then previously keep testing, rebound, testing, rebound, testing, rebound. And then on recently, right? Recently, they are also trying to testing, then rebound. But end up, it successfully finally break below a support level around 1.6305. So this is also another main thing that caused EUR/AUD to dropping further because they are breaking below a very strong and nice support level. So next target that what you can do is maybe support level of 1.6060 is the main thing that we can focus on it. So if nothing much special, this successfully break below, would likely to recommend EUR/AUD might be continue extend its losses. Next target 1.6060 according to the previous upper level here. I hope I also answer your questions for Saman, EUR/AUD. Stephen Davis asked, is all your analysis based on the daily chart? For my opinion, right, I likely to prefer longer time frame analysis like H4, day 1, and weekly. Because if you look analysis in the longer time frame, right, you can avoid certain noises. For example, if you are going to use only 5-minute charts or even 30-minute chart, right? Sometimes, right, some people travel to that country, they suddenly change a lot of that country's currency. Is going to affect your profit and loss. And then this is the thing that unpredictable. How can you predict how many people is going to travel to that country in that day that affect the currency movement, right? So sometimes if you use a longer time frame, then overall trends should be mostly focused on their fundamental side. The noises from the movement should become lesser. To answer different questions. Jawanto actually asked, trade loss voucher, what is the meaning? For these things, right, you can actually try to ask your account manager. I think they will likely to answer all of these kind of questions, the promotion questions. But trade loss voucher is something like when you lose money, then we do have certain voucher to prevent you from stop out. But further detail of the T&C, you can just refer back to your account manager for Jiawan Pro. Any more questions before we end? I think this should be our last questions. If no questions, then I think we are going to end now. Okay, so I think I assume I answer all of your questions, and I hope you guys really learn a lot of things today. And then really good luck for your future trading strategy. And then Justin actually asked about the trade loss voucher is what, sir? Is like a giveaway? Yeah. For the trade loss voucher, we will actually we will randomly pick some certain lucky winner lah. Then you guys will receive the email about the trade loss voucher thing. But mostly due to luck, this is the thing that unpredictable. But for those who not able to receive the trade loss voucher due to their luck, right? Then I really hope that you can gain more luck in your trading journey, lor. So it helps also lah. So yeah. So I hope I answered your questions. So if no more questions, then we are going to end now. All right, thank you everyone for your time. Wish you have a good day. Thank you so much for your supports.